You need to hear this. Not many tell you the actual truth about making 10K a month from real estate, but I will. Most people think buy a few properties, rent them out, and simply collect cash. But that number, $10,000 a month, doesn't just happen from sitting on a golden apartment. It takes strategy, repeatable systems, and most importantly, real understanding of the game you're playing. Today, I'll walk you through how I've done it, the actual paths to that number, and even less talked about methods that most investors overlook completely. And no, I'm not selling you a dream. I'll give you the options, the numbers, the risks, and you choose the path. But before we start, hit that thumbs up button, subscribe to see more, and let's get into the video. First things first, what does 10K a month really look like? Let's break it down. Making $10,000 a month from property means bringing in about $120,000 per year net income. That could look like 3 or 4 smaller units on long-term rent, 2 to 3 one-beds on Airbnb for short-term rental, a single large villa tailored for groups with systems and maybe even full-time staff, or a mix of mortgage-leveraged units and cash units working together. Each option has a different setup, different time demands, and different risk profiles. And if you're serious about making this happen and you want to structure your portfolio with proper guidance, due diligence, and returns in mind, click the link in the description and book a one-on-one call with me through my company Agora Advisory. But now back to the free stuff that I hope will really help you in the journey. So let's go deeper into each aforementioned strategies. These are the real world paths to making income from property, not the glossy YouTube thumbnails. Number 1, buy to let with cash. You buy the property outright and rent it long term. Easy. Simple, stable, but capital heavy. Some of the pros include predictable income, no mortgage headaches, no closing costs of the mortgages if you want to exit with selling the property or anything else. Some of the cons is that there is high capital locked in, lower ROI unless leveraged, and I'll give you an example here in Dubai. Buy 3 studios at 750,000 dirhams each. That's a 2.25 million dirhams total. Rent each at 60,000 dirhams per year. That's a total of 180k dirhams per year, or roughly $49,000. To hit 10K a month, you'd need at least 6 units like this. Not impossible, but cash intensive, and we're not even looking at the other costs, such as the furnishing if it's unfurnished or maintenance costs. I mean, honestly, this is a very easy strategy. It doesn't need too much explaining, but it's really good for someone who really has a lot of cash, wants to move it out, and have non-taxable income and profits. So basically, you invest in Dubai and you show all these costs for buying the properties as an expense, and the profits that you have from there will not be taxed. Number 2 is mortgage-backed rentals, which really work very well in Dubai. Buy with 20 to 30% down payment if you're a resident, or buy with 40% down payment as a non-resident. Use rental income to cover the mortgage costs, and you have some profit. The main pro is that the leverage will boost the ROI. Some of the cons is that requires good credit, requires some kind of relationship with a local bank, and there is higher risk with vacancy because you'll still continue paying for your mortgage. As an example, you can buy 3 one-bedroom units at around 1.2 to 1.3 million dirhams each. First one, as a resident, is going to be 20% down payment. The next one, by rule, is going to be 40% down payment. And if scaled smartly, furnished properly, and rented out on a very good payment, whether that's long-term payments in checks or Airbnb short-term rentals, these should definitely bring you around $9,000 to $10,000 a month. Another strategy is the BRRR strategy: buy, renovate, rent, refinance, repeat. How this usually works: you buy a distressed property or just a property in a very bad situation, as in it needs real furnishing and real replacement, maybe even of the floors or tiles or even the walls. You renovate it properly, you increase the value like that, then you obviously rent it out so you can have some cash flow to pay back your investment, and then you pull your capital back through refinancing with equity payout. The main advantage of the strategy is that it is scalable, strategic, and creates more equity for you. It doesn't involve just cash flow, but it also involves capital appreciation, which we always like. And of course, the main cons is that this strategy is actually more capital, as in your time intensive. It requires a lot of your input. It's not a passive strategy. There's renovation and timing risks, and there is also some market dependency. But if you do this 3 to 4 times and it works well for you, this becomes a system. Add capital or partner with others, and you're scaling predictably. And that is a very, very popular strategy in the US and in some of the Western countries, but it definitely is getting to start, or it's seeing some initial projects in Dubai as well, because some of the buildings are getting older and they really require renovation. And many of those landlords, they are used to not doing anything, simply getting their profits in on a regular check-by-check basis. But if you want to make it work for you, you have more time, you're a bit more active than those passive investors, then this is your opportunity. Number 4 is flipping off plans, which is not for the faint-hearted. It's definitely not a strategy that I would personally recommend because it's super risky. Yeah, obviously you buy early and you plan to exit before the handover, but what if market shifts completely in the opposite direction? You might be stuck with some money in this investment, not being able to do anything whatsoever. And also, most importantly, the thing that I hate the most in this strategy is that you will not have any cash flow. But if you do it right, if you get the deal right, maybe you even buy as an institutional investor or a portfolio investor, you buy a complete floor in one of those projects, you get a better opportunity, as in a better price per square foot from the developer directly, then it could definitely be a significant strategy that will bring you way more than 10,000 per month. But if we simply speak about one property, the main advantage is that is a low barrier to entry, because most of these projects, they require you just 10% down payment, and it has a big upside potential. If the market continues to go up, you will definitely see some good capital appreciation. And if you have the payment plan of 50-50, for example, you will be actually able to mortgage the remaining when it comes to the handover stage. I know this might sound a bit difficult, all these mortgages and refinancing. So if you want to learn more, watch some of my previous videos where I explain exactly how refinancing works. And if you have more questions, don't hesitate to reach out directly to me. So this strategy has also some cons. It's really high risk and is reliant on the market mood. And it works only if you know how to pick the right launch. So if you're not based in Dubai or the UAE, why would you try your luck and get into such a risky strategy? At least if you want to do that, really consult with someone who actually knows the market, or just take some time. Not simply visit Dubai, go to a mall and sign everything by on the spot. Actually do your market research, your due diligence, try to understand the areas, the developer, the options, compare them with the ready properties in the same micro location, and only then, if you're ready, get into this strategy. Number 5 is the capital appreciation through cycles: buy, hold, wait, and exit. So while this is very similar to the previous one, this actually includes the ready properties. Maybe you can buy a distressed property and then just simply hold it for some time and flip it afterwards, and you will have some profit from it. This is not consistent income, so it doesn't really go into the category of 10,000 regularly per month, but it has a bigger lump sum profit, and if it's structured smartly, it will definitely bring you that 10K a month, even from just 2 investments a year. If this is done repeatedly across different markets and different properties, this can definitely stimulate some monthly income. The next one is the Airbnb strategy, or the short-term rental strategy. For this one, you need really strong operations, so it's not super passive. It's actually very active, I would say, at least at the beginning, until you actually set up your ops properly and automate them. 2 or 3 Airbnb units can obviously outperform 5 long-term rents, but this has to be really done right with the right entry purchase. So you really need to buy it at the right price. You need to work with professionals or build your own team who's going to manage those properties and actually have the profit that you're thinking of. Tourist units in Dubai, even the smaller ones, can hit 15 to 20 to even 25,000 dirhams a month. But of course, for this strategy, especially in the UAE, and if we're speaking about Dubai, it needs a lot of licensing, cleaning, check-ins, and review management as well. But definitely the higher or even the highest ceiling if you do it right. Another strategy is property sourcing or wholesaling, which is actually one of the services that I personally do on a private service for my clients. You find the good deals, you pass to other investors, and you take a commission or a cut from it. In my case, I actually do it on a fixed price per size of the unit. So if it's a 1 bedroom, it's a fixed price, 2 bedrooms, a different fixed price, so that the investor knows that I'm tied to that. I have nothing else to gain. So I'll actually focus on what you want as a buyer and not trying to oversell to you. Basically, if you want something for 1.5 million dirhams, I have a fixed price for that. I will most probably return or find a deal that includes at least the same amount in negotiation or just simply because I found a distressed deal. So that makes it a win-win for both of us. It removes the marketing research, the understanding of different areas developers for you, the hustle of speaking to multiple agencies and their agents and presenting you the right deal numbers by numbers in Excel and understanding exactly if this makes sense for you, what are the exit strategies, long-term rental, short-term rental, resale, what is the potential there, and only then you would sign and get into the investment. So this is how I work, but I know many do wholesaling who are simply trying to get the deals and sell the actual deal for someone else, just presenting it as a good investment opportunity. For me, it's a bit different. I actually find exactly what you want, but it's a good strategy, especially if you are not looking into pulling too much capital of your own. That is the biggest advantage. The cons, it needs a lot of hustle. You really need to be a market expert to get these opportunities. You need to have a vast network, and it requires, most importantly, speed. This works well if you're well connected, consistent, and you know very well the market and you are very capable in terms of financial evaluations. Finally, there's the referral commission, which is not really a stable way of making 10K a month from real estate investing, but it's an alternative strategy where you can refer other investors to the agents that maybe have the units that you can't really access or find and split the commissions. The pros is that it's kind of passive, it's scalable, but it definitely has some disadvantage because is depending on the trust with that person. You really need to know each other well, reputation, and of course the deal flow. And speaking of trustworthy agents, if you're looking to buy investment units in Dubai with real transparency and good ROI, I recommend checking out our partner Silver Springs Properties. They're not just selling launches, they actually sit down with you, break the deal, and help you buy with logic and with some real help, not just emotions. If you're looking at some developers who might have some potential launches and you want someone to help you with that, then definitely check the link in the description and reach out to them right now. Here's the reality. No single deal will actually give you 10K a month unless it's a huge one. But stacking up multiple smaller, well-structured units or simply deals on commissions, that's how you get there. The secret is to build your actual deal flow, repeat proven models that worked for you in the past or worked for some of your friends and agents or just simply colleagues that you've heard of. Know your numbers, definitely do some learning there and know your numbers, how to do the IRR, cap rate, net yield, and of course ROI that we all know about. And always do your research and due diligence. Every deal is different, and the moment that you'll start treating two properties the same, you'll lose or miss something important. With time, you will develop this sixth sense. You spot things quicker, you run the numbers in your head also quicker, and most importantly, you build a system that works for you, not for anyone else. You don't necessarily have to copy others. You build something that works for you, that can be scalable, and you just double down on that. And in some cases, you might even create new income models around real estate that others aren't even using. So what's my honest take on making 10K a month on real estate? Is it possible? Yes, absolutely, but not casually. You can either do all the strategies that I've mentioned in the video, and again, to remind you, this was all for actual investors, not for agents, not for property managers. That's why I didn't mention those. Obviously, you can make a ton of money being a property manager or setting up your company to manage someone else's units on Airbnb. Subleasing is another option, which I'm not sure if it really works in Dubai, but definitely worked for me in Bali and some other places in the world. But as an investor, you really need to pick one of the strategies above or just mix a couple of them, which is what I usually do. Because most importantly, you don't want to limit yourself. You don't want to just stick to something and basically pray that it will work out. You really need to know everything and basically all kinds of ways that you can make a deal work for you. This obviously takes time, cash, and relationships, especially with your banks. Never forget about that. It's super important to have a good relationship with your bank, to have your income being paid at the same time every single month, to just be able to access better credit, and also getting financed on favorable terms, being able to actually refinance and access that capital on your equity whenever you actually need. All of that starts with building the trust with your bank and having a clear paper trail. Everyone wants the 10K a month goal, but very few take the actual time to understand what it actually takes to achieve that. It's not luck, it's not timing, and it's not as straightforward even as it might seem. It's stacked strategy, discipline, repetition, honestly, a lot of financial knowledge, exposure, experience, and just knowing your terms. And most important of all, very quick and high quality decisions. You need a mix of smart acquisitions, real analysis, relationships, and consistency. If you're ready to do that, you'll get there. I promise that. Just be consistent and keep doing what you love. Now I sound a little bit as a motivational guru or whatever, but if that really helped you, don't forget to leave the thumbs up and subscribe. And if you need more help, as always, use the link in the description to book a one-on-one call with me, or just browse the services we offer at Agora Advisory, also in the links below. Whether you'll be reaching out to me or not, I really do hope you will reach this goal faster, with more structure and less risk. Avoid that. Just play the long-term game. And with that, I will see you in the next one.